So
Cool.
the Diego is here. Diego, welcome. Just so everyone else knows, where you're calling from today, sir.
I'm calling from Miami right now.
All right, cool. So we're gonna, I think I heard Miami. I know your connection. Is your connection okay? Do you have a good?
Yeah, I think so. I think I'm muting myself and then got muted again.
No
So I
problem.
apologize for that. But yeah, I'm calling from Miami. Can you
All
guys see
right,
me?
excellent.
Okay?
Excellent. Now it's fine. Now it's fine.
Okay, cool.
And I know so what we're gonna do is we're gonna kick off the session, and I'll introduce myself, okay? And would love to get your feedback. All right, so good afternoon. My name is Ash Singh. I am a former real estate developer, originally from Cuba, here in Miami. Tell me what you're working on.
Sounds good. Hi, Ash. How are you?
Good.
So I'd like you to know that just over the last few months, over $100 billion have been wiped out from Latin Americans' savings accounts, and this money was not spent or invested. This is really the effect of currency exchange depreciation, and so the Latin American, middle and upper class, thinking about mass affluence, people that have between $100,000 and $1 million in savings, is growing concern about the economy in the region, and they want to invest their savings and money in stable assets and markets such as the United States. So at Ambana, we have built a platform that allows investors from Latin America to purchase shares on US rental properties in exchange for passive income from rent and appreciation. So we remove all capital barriers and simplify cross-border real estate investments, giving millions of people access to passive income they never had before. We have also spent the last 6 months building the regulatory foundation of the business that removes all complex legal and tax barriers for Latin Americans to invest in US real estate, starting with Colombia. So let me show you what I mean. So when a user logs into Ambana, they're able to browse and buy shares of rental property starting with just $500. This allows them to earn passive income and potentially double their investment over the course of 5 years. We've partnered with some of the best property developers in South Florida and have now our first project available in this state, which took in more than 40% of all real estate investments, residential, from Latin America last year. So with only $60K, we figured out the legal regulatory foundation. We built the platform. We secure our first real estate. We built a few B2B partnerships with brokers in Colombia and have over 500 real estate investors sign up on our platform. We're raising $750,000 to launch our real estate portfolio and pave the way to start creating tens of thousands of real estate investors in Latin America. Thank you for listening.
Thank you, Diego. Excellent. Let's get some feedback. Gentlemen, Mitch, Paul, what are your thoughts, sir?
After you, Paul.
Huh? You got it?
Mitch.
Paul, over to you, sir.
Sorry, when you look at like the Argentinian currency and the Brazilian currency, yeah, it's very easy to understand, and we won't talk about Nicaragua at all. But so the idea of getting your money out and moving it into real estate and hot markets like Miami, etc., Fort Lauderdale, it's smart, and simply being the intermediator of that process and making sure it goes in legally, and you meeting tax compliance, etc., is a smart game. Now the question is, you're selling, and these are rental properties, but you're selling fractional investments, right? So it sounds like fractional investments. Yep. So what you need to do is pool money together at certain levels, and then in a tightly controlled way, have that money buying actual rental properties, and then they can buy fractional shares of it. So that's the part I want to understand more of. I like the concept, connection point. I've dealt with a few companies in this space, and so what I want to know more is how do you actually bring the money in to execute the purchase of the rental properties, and then. And it's like you have to first buy the rental properties in order to sell the percentage shares. And then you can simply allocate the rental income, monthly, quarterly, annually as well. But I guess the gap for me is the process of how do you pool the money to buy the actual properties. After that, I get it completely. But that's the part that needs to be explained a little bit more.
And
so-
my reaction. Go
Okay,
ahead.
sorry. Go ahead. Go ahead. Go ahead.
reaction-
I'll cover all
similar.
the questions.
Sure. My reaction is similar. I wanted immediately to understand whether you are a REIT, or if you're not a REIT, how are you different? Because it sounds like buying into a real estate investment trust. You need to make clear the difference between the traditional way of doing this and what you're proposing to do.
Good feedback. Ash, any other feedback?
No, just go ahead with this. Let's let it flow, because if
Sure,
you ask too many
yeah.
questions, you might you might forget some of them, and that's what I tend to do to people. So
Yeah.
I apologize. Let's get the we'll get the Jedi Masters feedback first, and then I can come in with some elements. Go ahead.
Sure. Yeah. So our businesses start out for we work with developers, right, which have quite a bit of inventory right now, and so the way we work with, we're betting on a debt, or as little debt as possible, model where we buy an option to purchase a property. We list it on the platform. We measure investment intent. Once we collect a certain amount of money, we pull the trigger. We collect the rest of the money. We pay the developer, and we transfer ownership and start distributing, the rent money, and then obviously the appreciation once the property is sold, 3, 4, 5 years after that.
So it's technically an investment fund where you're aggregating the money from the region, but that's your firepower. If you can scale across the region, which has unstable currencies, your game is you have the technology, you want to rapidly scale the investment funding to give them a way out, a more stable window, and you can show them the properties, etc. But then you need to pool together enough to execute the actual buys on the properties. You're not going to take loans out on all of that, because that would be a different model. So you're going to pull money together in a way. It is a real estate investment fund, and then you will deploy the capital, but you will allocate as percentage shares.
Yeah, exactly. And obviously at first, so there's another component of the business, but before
So
we go into
that'll
that,
require an SEC a license as well.
Right.
Yeah. So we have partnered with Goodwin Law. They're helping us develop the framework. They have quite a bit of experience in real estate. They got a strong real estate practice, and so as far as licensing and framework goes, I think we're covered. But one of the things that I wanted to ask this panel is, in this world that we live in, where the VC community is moving away from, I'm going to call them capital intensive, asset heavy types of business models. We're getting a bit of pushback in like, how can you become more asset light? How do you develop a business model that's more asset light, and regardless of where interest rates are, you are able to execute your business model, crowd fund the money, transfer the money from Latin America to the US legally and efficiently, and then scale from there. I don't know if you guys have any experience and
I want to, and we'll come back to that. And if Olga wants to give feedback, that she's more than welcome to do so. But Diego, I want to come back to the business itself, because for me, when I was listening to your pitch, when I look at it, it always comes down to the value proposition of the customer, right? The value proposition of the customer. And for me, when I think about what Paul was describing, or we think about people that are living in Lebanon, right? There's so many countries out there that their primary element is just making sure that the cash that they earn this month is going to be worth the same tomorrow, right? That's the first thing, right? The real estate and owning like Miami hipster real estate or a reoccurring return, I think that's important. But when I think about the value prop around what you're doing, because it's about making sure that you kind of build the right elements in order to make sure that you get the first element going, right? And I think when you talk to these people, right, Diego, is I'm sure you'll realize their pain point is not that they're not earning a little bit of money. It's just that when they're taking their money and putting it into their local bank, it's devaluing. That's kind of the key point, right, Diego? Is that right? You know,
It is a
the
capital preservation.
underlying-
It is a capital preservation play all the way. And in fact, I would say a lot of people, I would joke about this, right? But one of our use cases is somebody from Colombia who's got a few $100,000 in the bank, comes to Miami for the weekend, has a couple of drinks, meets a realtor and says, "Oh yeah, I'll buy an apartment in Brickell," without even looking at the numbers, whether the cap rate is going to be good or not. All they want to do is just move their money quickly so
Sure.
that it can live in real estate and live in dollars. So capital preservation, 100%, it is a huge part of what we're doing.
No, but I understand that. But Diego, I want to come back to who your customer is, right? Because
Okay.
like for me, what you just described is not who your customer is, because those people that can fly down and drop money on a property, people like Mitch and Mr. Paul Bradley, they already have private bankers, right? They already have that service. They already have the Centurion card, and you know what I mean? Like all of that stuff. They already have that. I'm talking about, because what you described in your pitch was the people lower, right? The people that earn less than $100,000, right? Is that correct?
No, so there's two. I mean, so we got two types of customers. One is the mass affluence, so people that have between $100,000 and $1 million in assets. Could be stocks, could be CDs, whatever. And then the upper middle class, which we're probably talking somewhere between 50,000 and 100,000 in savings. So the first group, there's 6 million people in that bucket in Latin America, worth around $2.5 trillion. The second group, we're talking 12 million people, worth $1.8 trillion. And so I think the people you're describing is more high net worth individuals, 1 million and above, right? Of which, those are the ones that are served by UBS and Credit Suisse and HSBC and, BlackRock and all those guys. But not the mass affluence. I mean, in fact, mass affluence is actually a customer segment that local banks are trying to figure out. They haven't been able to, because trust in financial institutions in Latin America, and I imagine is the same in many emerging markets, it's very low.
So the middle class, basically, right? Because mass affluence is a word that not everyone knows, but the middle class, correct?
Yeah, middle up, upper middle
upper
class.
So when and how do you take fees?
So the way we make money is whenever the property is listed on the platform, right? We charge an origination or a listing fee worth 5%, and then we charge a 1% additional to manage the investments on a yearly basis. We also take money from monthly rent to manage the property. Early on, we will outsource the property management to Roofstock. One of our advisors is a former colleague of mine at Uber, Mike Shoemaker. He's the COO at Roofstock. And then the last source of revenue, it's a commission on the appreciation of the property when it comes off our balance sheet.
Got it. Understood. All right. So how much are you looking to raise right now? You need 750,000?
750, and that will help us launch our our real estate portfolio. It'll work as working capital to buy the options and to cover some of the money of the first deals if we aren't able to sell it as quickly as we think we can. Build the core team to launch the rest of the portfolio, etc.
Maybe jumping back to your thing about REITs. So I had two big logistics facilities, one at 80 million and one at 24 million in Singapore. And what I did was once I built up the business where they were pretty full, I then REITed my buildings. I sold them off as REITs and I leased them back for 10 years. So I turned my own assets into virtual assets. So that way I didn't have fixed costs, and I took the money out before we did an IPO. And in India, we built logistics parks, and then some of the buildings we did REITs actually to Capital Land, a Singapore government entity. So that's the other side, how you can literally take property that you live in or run, and you can literally flip it and take the money out through REITs. In your case, if you have the technology, the market is there. You just have to, you have a couple basic things. You're going to have know your investor, because when that money enters the United States, they're going to want to know, great, you're bringing in $10 million, but where did it come from? And then you're going to say, here's the list of people, but you're going to have a simple one-page form. I know your investor that they fill out online.
KYC,
Yeah, exactly.
all of that is AML and KYC is something we've been spending.
And then the other one, is you're going to need a holding entity, a legitimate bank, and a neutral party to hold that money and pool it in a regulated environment before it's released to buy the properties. Because otherwise, people are going to say, "Why do I give you money? Who are you?" Or even a law firm. I don't care who that law firm is. You know, with PPE, we did trading, and there a lot of law firms weren't that reliable. So what you need to make sure is that you have a neutral entity that will hold the money and then execute it, preferably an entity that has a SEC registered license, and then they take a fee, but then you cover all the legal requirements, and then you focus on the tech, aggregating the money, and investing. And there may be some additional revenues that you can charge in the future. You know, once you scale this, there could be some additional value-added services that you can add on through alliances and with a markup as well. So but you got to close those minimum holes, and those are things investors are going to jump on right away. So get your message through tight, how you're going to build this business, stability, aggregation, a seamless way of buying property. You get your dividends every quarter, that kind of thing, with full transparency, and then preempt the issue and say, all meeting the registration and legal requirements of the United States. So kill that issue when you tell the story, so that you can focus on the tech play.
Thank you, Paul. So quick question. So like I was saying, you know, we've met quite a few VCs. I mean, some of them, you know, in the billions of dollars, right? And right now, as I was saying earlier, coming back to my previous point, is, you know, everybody's moving to SaaS and software and blah blah blah, and nobody wants to know anything about like asset heavy businesses and stuff. And so what I've heard from you is, we can test the model, which essentially basically means there are enough investors and there's enough demand for these assets in Latin America, which we believe there are, right? Just based on the data that's published by NAR. Latin Americans invested just in residential $6 billion last year, right? So there is enough demand, and these are all individuals that are going through a realtor today, right?
But in your story, if you tell me, oh, I'm going to aggregate money and then we're going to buy property in Florida, I'm thinking, wow, some big real estate agents can do that. This is where you need to tell the tech story. You need to say, we built a really unique tech platform, and it allows us full visibility, KYC, all the legal requirements are built in, financial monitoring, and it's really cool technology with advanced algorithms. And it allows us to provide complete integrated transparency. And I need part of this funding in order to further refine the technology as we scale out. We've already locked in our real estate partners. We're targeting customers. We're already putting in our regulatory compliance requirements with full transparency and security protocols. Now you got to tell me why that technology is so unique. If you tell me the technology, then I believe you're a technology play linking to real estate and capital. But if you don't tell me that technology story, which you didn't, by the way, then it's money and real estate, and then the investors are thinking that's not a sexy play. So make sure you tell the story right. That's my advice.
And to your earlier comment about how do you get the VCs to pay attention, it's a SaaS play, a high gross margin SaaS play, because you've taken care of everything Paul just described.
Cool. So would this be, And maybe we're running out of time here, but as far as moving from an asset heavy to an asset light SaaS play, right? Does that matter? Do I have to build that into this story or is that too much detail for the early pitch and for early stage, like pre-seed seed, like
You're
us?
building a
I love your
micro
idea of
investor network. Use this word. I'm building a micro investor network. That doesn't sound asset heavy.
Yeah.
You got to tell the story the right way.
Yeah,
I apologize. I need to drop. I have to take care of business.
Thank you, Mitch.
Great job.
Yep. So I think those are all the questions. I mean, there are other ways of executing this, which are also through technology, but I'm not sure whether you should bother with this. I mean,
One thing around this, Diego, I want to come back to this because it's very important to know your customer. Right now, you said things like 6 billion Latin American people. Do you get what I'm saying?
Yeah.
Part of your SaaS discussion, like to zero in on this, right? It's like, and that's the point. I mean, Paul Bradley, I think the insight today is that, there's a lot of other people that can probably try to tackle the real estate play of it, right? It needs to be transformed into the, this micro investor network, right? That Paul's talking about, or a high gross margin SaaS business. But it comes back to like, who are your early adopters that are going to come on board? And right now it's too vague, Diego. It's too vague. And like, that's why
you mean too broad?
Too broad. Yeah, too broad, right? It's like, you know what I mean? And then when you think about too broad, you're like, okay, the big banks can probably handle this. For me, as you were talking, my view was around exactly the point, right? I could totally see that there's a certain audience of people, okay, in the middle class that really want to preserve their wealth. And then there's wealth preservation, and then wealth, you want to increase your wealth. Do you know what I mean? Wealth growth. There's a group of those people that would love what you're doing, right? And I'm trying to, like, for me, it was, my brain went a little bit differently, Diego, my brain went like, over the last 5 years, when you started off by saying wealth vanished, right? You said wealth vanished, right? How much of that wealth was parked into stock market and crypto?
Zero. All in savings accounts. Just in Colombia today, there's $80 billion in savings accounts doing what?
So
nothing.
So what happens is, to your point, right? You are a next generation savings account. Okay. Right. The fact that you're doing the real estate element is a little bit different, but for me, it's very simple. Like, if I was, it's a very simple, like, just you're a next generation savings account. Now, you happen to be able to figure this out in a reliable area that Latin American people trust, right? The investors in real estate. But listen, you can ask Paul and myself. There's other places outside of Miami that people trust, right? Real estate in Singapore is even better, right, than Miami, right? For instance, right? But that's not it. It's the next generation savings account that you're building, okay? And this is something that you're going to have your micro investor network, and you can build a model of building out returns as well, right? But the first thing is preserve, then grow. Does that make sense?
Yep.
And so if you have a thing where you're backed by a non Latin America currency that's strong, right? Like the Singapore dollar, the US dollar, these things don't really move, right? They just kind of stay, right? I think that's kind of where you start off. And for me, that's really powerful, Diego. Do you get what I'm saying?
Yep.
It's and it's such a powerful first statement. And then all the other components. I know real estate is sexy, especially in Miami. I've been there. I've been pitched. I've gone to real estate events in Miami, and you know what I mean? The very good looking people there, right? But more importantly, does that make sense, Paul, in terms of where we're going with this? And so, Diego, remember, when you're doing your elevator pitch, and I really appreciate you saying, hey, I'm not being able to crack the VCs. Why? But part of this is the last half an hour we've dug deep, and we have to get this out. Does that make sense? Do you know what I mean? There's no one else that's going to spend this time, and I appreciate Mitch's feedback and Paul's feedback, and I want to make sure that all of these things come out. But that's kind of where we want to go with this, right? And then that's the model, right? And I think if you can build that out, the VCs are going to understand this, because then it's like, oh, I'm investing in a next generation neobank, right? That's global. It's not just helping. It's helping Latin America, and it's got the intelligence engine to not just preserve capital but grow capital. And they're going to start off with real estate in Miami. Okay, that's it. Do you get what I'm saying?
Yep.
But that's your bigger picture. Does that make sense? You know what I mean?
Yeah.
Does
Yep,
anyone
yep.
care? Like some people like to brag about the fact that they have property in Miami, but most people don't care. They just want preservation and growth. They don't care if it's in Miami or Singapore or anywhere else, Timbuktu, Las Vegas. It doesn't matter, right?
Yep.
And I think
No,
that's kind of the element.
I get it.
You know?
Yeah, we've started. So I agree with you, or I know, there's a cultural bias towards real estate, and the reason why we've chosen real estate is because it's an asset that people trust in Latin America. They don't trust, we're talking about people's money in savings accounts. People aren't invested in CDs or ETFs or stocks. Penetration of those financial instruments is extremely low. I mean, imagine it's the same in Malaysia and
what happens for me, Diego, like my starting point, and it sometimes comes from a simplicity perspective. I always try to break things down. And for me, if you have the next generation savings account that can guarantee, capital preservation, right? Plus growth, right? Plus growth. That's kind of the starting point. Does that make sense? Right? That's my view around it. And I just think that's so powerful right now. I see this problem every day. Okay. And we speak to startups in Latin America. They're bleeding. It's tough for them, right? You know what I mean?
Yeah.
We see all this stuff, right? Let's hear from Olga. I know Olga has some feedback as well.
Hi, Olga.
Hi, Olga.
So my apologies, I joined late.
It's okay. Go ahead.
Meetings, but it's very interesting. And my apologies, Diego, I did not hear obviously your whole story, the whole pitch. But I have just a few technical questions here. And so one of them, I just want to understand like how much risk your business will potentially have. So for example, you sell a number of, let's say, buildings. So you have, let's say, hundreds of investors who already successfully own properties or shares of the properties. And let's say, when we've seen it before, real estate market is not always growing. Sometimes it goes down. Sometimes people want to get rid of, their investments. And so let's say, I'm not saying scenario of 2008 is going to happen, but there is a decline, for example, in Canada even now. So we're seeing decline in property. So if a number of investors want to sell, so who, like, is it on them? They carry that risk. They will have to find buyers, or just, do you even give them an opportunity to sell? Like, how do you handle that scenario if investor wants to sell? Do you buy it back, or do you tell them, hey, you have to buy, you have to find investors yourself?
Within our technological SaaS platform, we have a marketplace that will give visibility to the rest of the micro network of investors to those opportunities.
Right. So it kind of will have a built-in functionality that will allow to look for other investors who potentially will be willing to buy.
Yeah.
Let's
So
say
we'll add liquidity through network effects. So the more investors there are in the network, and obviously we'll have to manage the fine balance between supply and demand. But the idea is that we'll continue to add investors in. If some of them want to get out of their positions, they'll be able to transfer ownership throughout.
So transfer ownership through your business. So does it mean that you like, let's say in a situation when it's a market corrections do happen. So will your business buy those shares back, or the investor no? So the investor basically
just in the same way, if they were to buy their own property in Miami, they'll have to try to sell it, this would work out exactly the same. So yeah, it is as in that way, it works almost like a private REIT. Paul was talking about that. So it's a private REIT where, all the, it's not your average like BlackRock REIT that you can trade, right? It's more of a private REIT, even though we're not using a REIT structure. It's more of a series LLC structure.
Got it. Okay, thanks for clarifying.
So I want to move ahead, Diego, if it's okay, because I know we've spent a lot of time on this. I really feel like, does that resonate with you, Diego? What are some of your takeaways from this? I just want to make sure you, because
yeah. No, this is great. It's been one of the best feedback sessions we've had in quite a few weeks now. So, I love the idea of the big picture, right? I love we're fully aware that we're capital preservation forex play, and that's one of our differentiation points. We probably have to move away, based on the feedback you've gotten, move away from the real estate story and the partnerships with developers and more into the slickness of the platform and how easy it is to invest in real estate with us. There's so I think that's probably the main one. Like, we help people preserve their wealth through an asset that they trust, which is real estate, and via a technologically advanced micro investor platform. I think that's probably one good way of summarizing, and then we can worry about all the details about being asset heavy or not asset heavy, and collateralizing the asset afterwards, or selling in the form of REITs, or whatever the case may be. But I think those are secondary details, even though they're critical to the business from an operational standpoint. They're secondary to the big picture of the dream that we're trying to sell, which is creating.
To give you one example, there's a friend of mine. They have a company in Colorado, and they just did the first tokenization purchase of real estate within the US without the foreign currency regulations. And what they did was they created a token that's convertible to US dollar, so it's easily convertible, and you buy the token, and then with that they bought a couple houses so far. And based on the number of tokens, that's your percentage ownership of the property, and they rent it out, and then it increases the value of the token, and you can sell the token whenever you want. They're creating a marketplace. So that's another way of doing it, just as an example of what's coming up in the market.
Diego, would you like me to pitch this idea back to you? Would you like me to pitch this?
I would love that.
Okay. So you get to introduce yourself. You're in Miami. You can be whoever you want. You just pitch you introduce yourself, and I'll try to pitch the idea of this micro investor network, next generation savings account experience, and where your secret sauce is. Okay.
Hello, hi Ash. My name is Diego Varela. I'm a partner at Insight Partners here in New York. We invest heavily in fintech in Latin America, and I've heard about your idea. I'd like to know more.
Excellent. Thank you very much, Diego. My name is Ash Singh. I'm part of the Ambana team. As you might know, $6 billion was wiped away from real estate in Latin America, right? Wiped away from savings accounts in Latin America. We have discovered that a lot of this has to do with currency fluctuations, corruption, and all these other components. And today, in 2023, we believe we can change that. And so what I wanted to do as somebody from Latin America, I want to create, and we've already started building the basis for the next generation savings account, right? And this allows anyone in Latin America to park their money with us for almost guaranteed preservation of their capital. And through our dynamic network, we can leverage our micro investor network to be able to find opportunities, starting with real estate in Miami, to be able to even drive some returns. We recognize that there is a wealth of opportunity in Latin America to find people that are looking for these types of solutions, and also allow them to have the flexibility to pull their capital out. We know that crypto and Web3, there's been a lot of challenges in the fintech space, but we want to go a little bit more back to basics to make sure that we have good investments and build trust within our customer base to see where things go. We've already invested time to build the regulatory framework and ways to access capital and deploy capital here in the United States. We're looking for $750,000 to continue to build the network, as well as be in a position to drive activation to take our 500 micro investors and make that into 5,000. Would love to chat to you more over coffee here in Miami to see if you can participate. Okay.
Thanks so much. That was very good.
All right,
So
Diego.
much.
So I went with that. Does that make sense?
Loved it.
Yeah. You know, like that element, I just feel like that pain point and everything is there. And I want you to just sort of switch the paradigm. So leverage what we've done, what we've talked about, and let's try to, like, you know what I mean? Move it into a direction where it kind of pushes into that SaaS element that Mitch was talking about. And we'll get you there. We'll get you there. Okay.
Yeah, sounds good. I have a meeting with a VC in about 40 minutes, and I'm going to test this new
Do it, yes, and let us know, right? Okay, you're in Miami, right? Which investor are you meeting? Is it a brand name?
This is Katie.
Okay,
Ventures.
got it.
York.
Because sometimes we have,
Miami,
depending on the market, we've had situations where we've done this, and then the investor will be like, hey, do you know the guys from the Hyper Accelerator? Because you sound like that. So if that happens, let us know, but we're always happy to help you get your message across. Okay.
Yeah.
Drive that impact. Do you get what I'm saying? Right.
Yeah.
We'll see where it
Thanks so
goes.
much.
Diego,
All
good
right.
luck with your investor pitch. Thank you. Cheers.
All right. Cheers.